presentation. After that, we'll open it up for questions and answers. So without further ado or undue ceremony, we'll turn it over to Marie to take us through the view of the outlook.
Thank you. So thanks everybody for being here, and I'll try not to be long-winded, although that is my temptation. So, but I will do my best to leave plenty of time for questions. So let me just first say, though, which I am always compelled to say, that human history, all of human history, has been connected with. All of human development has been intimately connected with the development on mobility. So, we obviously know how we've gone from sort of camels and horses to boats to trains to planes, and at every such juncture we have made significant improvements in economic development and in wealth for the humans on the planet. So I think it's absolutely unambiguously the case that we have to fly. It is only one form of mobility, but it's a necessary one. And today we have also understood that in order to be able to do so and deliver on this economic development promise that aviation holds out for everybody, we also have to fly sustainably. So that is totally the foundation for everything we do in our team. So speaking of economic development and that prosperity that we wish to create, this is sort of the current situation where growth in the global economy has gone from over 6% in 2021 to something just below 3% in 2023. And this is obviously a very sharp economic slowdown, and I think it therefore is keenly felt by many, and often that results in a rather liberal use of the word recession. So recession in economics is obviously 2 consecutive quarters of negative growth, and luckily we are not expecting that on the global level. But of course, any global aggregate is masking tons of regional and local divergence. There are countries in recession, including Germany, for example, and there are also many more countries in debt distress or at risk of becoming debt distressed today than there were as recently as in 2015. Since 2015, the number of such vulnerable nations has risen by, has doubled. Yeah. So in spite of this sort of benign, lukewarm, current global economic growth scenario, we have to take note of those pockets of worsening outcomes. So one of the reasons why we remain quite confident that we are not going to see a global recession is these absolutely incredibly exceptional labor markets. Normally, when economic growth slows sharply, we would expect to see higher unemployment rates. And instead, the unemployment rates, certainly in the Western world, are stuck at very low and even historic lows in some cases. The US unemployment rate was just published at 3.7, so that rose, but there's another survey, which is the actual job survey, and that showed monthly job growth in the month of May at over 300,000, which is an absolutely stunning number. And I, for one, have habitually used about 100,000 monthly job growth as a ballpark threshold above which we think that the economy is expanding and below which it might be contracting. So we're several 100,000 above that critical level. So this means that people are earning wages. Yeah, more people are working today than ever before in the world, and they're all earning wages, and that is more important for global growth than the fact that those wages, that the purchasing power of those wages is curtailed by the rate of inflation, obviously. So this is the picture of inflation. So luckily we think that inflation peaked in 2022, but we still have had a step up in the price level, and that is of course felt by everybody and contributes to the slowdown in global economic growth. For sure, one of the main culprits behind the inflation figures are the fuel prices that were heavily impacted, of course, of the war that broke out in February 2022 in Europe. And we see on this chart on the left-hand side, the green line is jet fuel, the blue line is crude oil, and the red space is what we call the crack spread, so the difference between the two. So our industry is unique in this context because we use more fuel than sort of consumers do. Yeah, so fuel weighs more in our price index, if I can put it that way, because it represents up to 30% of airline costs. And on top of it, we don't use crude oil, we use jet fuel. So we have a higher price and a larger weight than normal people, if I can put it that way. And that has obviously been a challenge for us. It impacts our margins, no doubt, but it still is not necessarily impacting the traffic, as we will see soon. So now we think that there's obviously some easing in these prices, and that's good news, but the spread still remains on the high side between jet and crude. So traffic, as I was just saying, has not been really dented by any of these cost evolutions, and we expect the full year 2023 traffic to stand at 12.2% below 2019. And these are RPKs. Sorry to insist maybe on these definitions, but RPKs are revenue passenger kilometers, and it's a measure that takes into account the number of passengers and the distance they travel, both of which are, of course, an important, very important to measuring our traffic. So we're nearly at 2019 levels, and we think that the industry as a whole will exceed 2019 levels next year. So next year is when we expect full recovery from the COVID episode. But we have to also remind ourselves that that doesn't mean that we have caught up with the trend that we had in traffic from 2019. If COVID had never happened, we are still well below the trend if COVID had never happened. So we are recovering to 2019 levels, but we're still impaired compared to a non-COVID scenario. Yeah. And then if we just look at passenger traffic, this is how we expect the recovery to articulate itself, and it sort of makes the point that I was just making, that if you were to draw a trend line from 2018, 2019 in a more or less linear fashion, we can see that we're still well below that trend line. And we can also see here that we are expecting or sort of fearing more downside risks than upside risks to our scenario. And sort of, as I alluded to earlier, in terms of global averages, whenever you look at a global figure, there's obviously lots of local and regional divergences around that global mean. And the biggest sort of question mark that we might have around our scenario is, of course, Asia Pacific. So the phenomenal news is that China opened up its market to traffic again in January, whereas in our previous forecasts we had not expected that to happen until the middle of this year. So that has certainly improved our outlook in a major way. And there's still some questions as to exactly how the Chinese recovery is going to articulate itself. So there's some potential upside if that should still beat our expectations, so to speak. And we can see here the recovery years per region in terms of passenger traffic. So North America and Latin America recovered to 2019 levels in 23, we think, and everybody else in 2024. So that gives the industry average 2024 as the recovery year. Now, coming back to China and what's happening there, on the left-hand side you see the Chinese market's shares of international global traffic in yellow, the domestic global traffic in pale yellow, international share within Asia in dark blue, and domestic share within Asia in pale blue. And then we can compare that with the bars on the right-hand side and see, how much that has changed. And that is obviously why traffic has been muted in this region primarily, but it also holds out the hope of where it can go if this market now manages to progress the way we would hope and regain the traffic shares that they had in 2019. And if we just look at Chinese domestic and international monthly flights, the red line shows us that domestic flights are already above 2019 levels, and the spectacular increase that we're seeing in international flights is totally put into perspective when you do a longer chart, right? So this is where we see that stunning current rebound is still from a very low level, so there's still some distance to go. And of course, there's also a question about how the rest of the world responds to China's reopening. So many countries are responding very positively and increasing their flights to China, with one notable exception at the moment, which is the US. So of course, our industry, being a global industry, is also subjected sometimes to geopolitical events that can curtail the recovery of our industry. Now, if we were to sort of summarize the risks that we see for 2023, we can look at it in this way. So we're delighted that we managed to not have a debt default in the US by the slimmest of margins, but that was obviously absolutely fabulous. And we have we produced this one the first time in January, and now we have changed our mind a bit on the supply and demand imbalances, which we think are impacting our industry more and for longer than we were hoping in January. And I often quote what somebody said to me, that we now consider aircraft deliveries, when aircraft are delivered 6 months late, that's considered on time. I think that that's a very good expression of the kind of imbalances that we're still suffering from, because it was so much easier to turn the global economy off than it was to turn it back on again. And we have various constraints in all kinds of domains, not only supply of aircraft and parts, but even in terms of airspace, we are constrained. So those things, make it. We have to always be aware and alert and agile in response to all of those pressures on our industry. So the industry is absolutely phenomenally talented in terms of controlling costs. So the expenses, we think, are limited to 781 billion this year. And revenue, thanks to passengers really wanting to travel, are rising to 803 billion this year, leaving an industry operating profit of 22 billion this year is our forecast. And then you see on the bullet points below the percentage increases in revenues and expenses and in passenger yields. So of course, when you see a passenger yield of minus 1.1, you might think that that's problematic, but then we have to put it again in the context of previous experiences, and in 2022 yields rose by 9.8%. So that is a clear positive over the 2 years, obviously. Cargo was our absolute savior in 2021, as I'm sure you all are aware of, and some of the buoyancy is going out of cargo because of the slower economic growth and slower growth in trade. But nevertheless, we're expecting 142 billion cargo revenue this year, which is still significantly higher than the 100 billion revenue that cargo generated for our industry in 2019. And similar to the point that I just made about passenger yield, the yield in cargo is likely to drop by almost 29% this year, but that has to be analyzed in the context of the absolutely phenomenal years of 20, 21, and 22, where you can see the percentages there on the right-hand side. So net, this leaves us with a profit of 9.8 billion. And again, I cannot commend this industry strongly enough, for the absolutely marvelous resilience that we have, to be able to go from a loss of about 140 billion in 2020 to a positive result of nearly 10 billion in 2023. That's an amazing turnaround in such a short period of time. So I think our industry is magnificently resilient, but I do hold out also the reservation, so to speak, regarding our robustness. Because with a net profit margin of 1.2%, we understand, of course, that that's very slim, and we have to integrate the fact that we might be amazingly resilient, but we still could do better in terms of robustness. So net profits per region for this year are here, and I applaud them all, of course, because every region has improved its financial results this year, even if some remain in the red. But we think that this positive evolution is going to continue into 2024 as well. And the final expression, sort of how we can present our profits is per passenger. So per passenger, we are expecting $2.25 of profit this year. That's compared to minus $1.1 last year, and compared to minus $76 in 2020. So again, it illustrates the same point, this phenomenal resilience and rapid turnaround from absolutely historic low. But it still is only enough money to buy about half a cup of coffee in Geneva, where I live. Yeah. So, you know, maybe we should ask for tips as people board the planes. But in any case, it's absolutely the time now to think outside the cup and try to protect and grow what's inside it. Thank you very much.
Great, thanks very much, Marie. This presentation will be available on the website, so all the information will be there. We'll take some questions. We've got about 15 minutes, so if we could keep to one question and very short, we'll get through more questions before we run out of time. We'll start with Karen in the front row.
Thank you, Tony. Karen Walker, NTW. Thank you, Marie. Can you just pick up on that point of robustness, robustness versus resilience? And you said, you know, airlines still have to do more about robustness. What do you mean by, what is it that they could do to be more robust?
Yeah, so resilience in my mind is like your capacity to rise up again when you've been hit over the head. Yeah, so our industry is definitely a whack-a-mole industry. We get hit over the head frequently and we always bounce back, and that's absolutely amazing. And that's resilience in my vocabulary. Robustness is to not fall down when you get hit over the head. Yeah. So this is in terms of having stronger balance sheets and perhaps lower debt, and also something that unfortunately I don't have the chart here, but that is a structural feature of our industry. When we look at profits in our industry compared to the rest of our value chain, historically speaking, airlines are always the least profit-making, whereas the other parts of our value chain, don't suffer the same fate. So there's a, I think, significant message in there where, maybe airlines have sort of outsourced too much of their revenue-generating capacity to other parts of the value chain, and maybe it's time to, insource some of that revenue-creating capacity or cost reducing capacity. And of course, my great fantasy would be if airlines could insource fuel supply. Yeah, that would be magnificent. Just throwing it out there.
Okay, take a question in front.
Richard Sturman, RSR. This morning I was in a presentation together with Andreas at Qantas, and Alan Joyce said that he thinks that airfares are moderating already. When you look at the 2024 projections, how much is that taken into account of your view for 24, 25, and how will this impact or influence the profits of airlines?
So debt and airfares, I didn't pick up on how they were related.
Are prices moderating, and is that to be agreed?
Airfares, will the moderation of airfares have an effect on the profitability of the airlines next year?
Right. Okay. Yeah. So I think that's a very profound question, and it obviously relates to how price sensitive we think that our passengers are, and will be in the future. This is not a static number, and so far I must admit, that we have been rather amazed at the low price sensitivity of the demand for travel so far in the recovery. And logically speaking, you would think that this cannot last forever. Yeah, that at some point passengers would become more price sensitive. And the moment, one such potential moment could be when unemployment rates start to increase again. Yeah, so that I think it would be something that we would expect. Now, what that does to overall numbers, though, is of course a more complex question and hard to answer in black and white. But yeah, we are aware of the exceptional situation that we find ourselves in today with these exceptional labor markets, and think that this cannot last forever. So I would indeed maybe go in your direction a bit and think that it's possible that 2023 is a bit of a sweet spot. for all of these developments, and that the sweet part of that sweet spot is likely to wane going forward. And debt levels are obviously an issue, right? And they are more an issue when nominal interest rates are rising and when global economic growth is slowing. So that's not a super happy place to be. And all of this connects back to the labor markets, because if we continue to have a very low response in labor markets to the tighter monetary policies, then that would argue for higher interest rates for longer, and that would not be helpful for our industry. So those are threats on the horizon, for sure. And we've seen how prices are still a bit sticky in response to the current monetary policy tightening. So this, I would say, if I had to flip towards the early cutting of rates or continued high or maybe even higher rates, I would fall in the latter camp.
Robert?
Hi, Robert Silver, Travel Weekly. Have you done any work on how much the aircraft delivery delays are costing the industry or will cost the industry in the years to come?
No, I don't have any monetary value for that issue to share with you, but it is obviously an issue, there's no doubt. And the lack of spare parts and so on is also complicating it for airlines to even take aircraft back out of storage. So this is a potential capacity constraint, that's for sure. But that's also part of the sweet spot in a funny sort of way, because it's obviously better for airlines that they don't have too much excess capacity at the moment.
Okay. Take a question here in the second row.
Hello, Robin Einstein from The Australian. I was wondering how you see the production of SAF influencing airfares as we head towards that net zero target.
I think the first thing that I always like to point out when receiving similar questions is that the business 101 is cover your costs. Right? Any business that fails to cover its costs is obviously not a robust business and probably not very resilient either. So everybody needs to cover their costs. That's a very basic impulse. And of course all of these costs that we mentioned, whether it's jet fuel or sustainable aviation fuel and labor costs, and all the costs associated with the issues in the supply chains, and the list gets longer. Right? All of those costs seem to be either high or rising. Absolutely. And today, the price of sustainable aviation fuel is 2 to 4 times higher than the price of jet fuel. So costs are increasing, and airlines will have to, find a way of covering their costs, or they will start making losses again. Which is actually not in the interest of anybody, right? Because the rest of our value chain and the global economy, depends on airlines being able to move these passengers and goods around. Otherwise, nobody's going to make any money, and we will lose this impulse towards higher economic development that we provide, along with the rest of the transportation and mobility sector. So, but contemporaneously, though, let me stress, that today we only have less than 0.1% of total jet fuel demand available in terms of sustainable aviation fuel. So it basically doesn't exist, right? And when we read about deals that are being made, let's not get confused about, this being people actually laying their hands on sustainable aviation fuel today. It's all about the future, right? So for sure, this is, now I don't mean to deviate too much the conversation, but we definitely need massive, we need everybody to align with the airline's commitment to achieve net zero by 2050, and ICAO, our UN body for civil aviation, ICAO's commitment to achieve net zero by 2050. Everybody needs to align around those objectives for us all to be able to achieve this, and we have to do this together. That is absolutely necessary, and it has to happen now, because of course delay will imperil the 2050 horizon objective. Yeah, so, you know, while we're doing all of that, more costs are likely to increase until such a point when all of these solutions have become commercially viable and are being produced at scale. Yeah, when we reach that lucky moment, then we can start thinking that these costs can decline again. I cannot, you know, pinpoint necessarily when that's going to be, but I'm tempted to say maybe closer to 2040.
Okay, we've got about 10 more minutes left. I take a question at the back of the room, and then we'll come forward.
Yes, Iteke de Jong, Daily Telegraph, the Netherlands. You spoke about the cost, but there's also the income side. When I'm listening to you, it looks inevitable that the prices of tickets will go up need to be up a lot more. How do you look at that?
Well, you know, as an economist, yeah, so this is my roots, yeah, is as an economist. So if I look at that from a global perspective and economic development perspective, I think that that's too bad, yeah, because, you know, obviously what we want to do for economic development is to make all forms of transportation accessible to everybody at the lowest possible cost and sustainably. And it's still the case that the poorest countries in the world tends to be predominantly the ones that are located in the middle of Africa that lack all forms of connectivity, roads, rail, ports, and aviation. So you know, we are not saying that we're the most important in that aspect of the universe, but we think that we are a necessary ingredient to promote that. So of course, you know, the higher the price, the more of a luxury good this becomes, and the less you can leverage of this on this capacity that global aviation has to really make a difference in terms of the, you know, UN Sustainable Development Goals, put it that way. So that would obviously be a shame. So what I would like is for the whole world to state very clearly that what we need is sustainable aviation as quickly as possible, and preferably before 2050. If the whole world really commits to that end game, yeah, really says this is what we want for humanity and the planet, then I think that the policies follow very naturally, and, you know, we could save ourselves many of the conversations that we're having around policies today. So the end goal has to be clear, and in my mind that end goal is unambiguous, and if we work towards that end goal, we will work towards a continued democratization of air travel in the interest of everybody.
Take a question in the third row.
Hi, Joanne Kuczynska from Reuters. I wanted to ask, or put to you, I guess, the argument of a lot of environmental NGOs that fundamentally growth in the aviation sector runs counter to sustainability goals. That with economic growth, with more passengers, with more flights, it's impossible to actually reduce emissions enough. What do you have to say to that, and do you have a response?
Yeah, so that's obviously a very conditional, you know, making such pronouncements would be conditioned upon assuming that we will not get sustainable aviation fuel, that we will not make any progress in terms of aircraft technology, and that none of the solutions that we are promoting in order to make our industry sustainable are valid. Yeah. So, of course, so if you assume that you're going to fail, then that's the obvious solution. But again, you know, it's I think it often a very I'm a bit flabbergasted, I must say, to that in relation to that conversation, because, you know, we've all lived through COVID. Yeah, we all saw what happened when we lacked connectivity. Where were all of those people during those years? I ask myself. You know, they must have seen the effect, yeah, which was obviously devastating for everybody, and we now have 100 million more people living in abject poverty. I mean, I'm not saying that that is solely attributed to the fact that we weren't flying. It was obviously the whole package, but, you know, I think that we have ample evidence of the losses that we inflict upon ourselves if we choose to take a degrowth attitude to these developments, yeah. And I think it's, you know, it's only from a position of privilege that you can even make such statements. And it's forgetting about, you know, the realities in Australia, Africa, Latin America, even the US. You know, every continent except the European one, you know, needs aviation. there's no ambiguity to that. So if we agree that we need aviation and we agree that we need to do this sustainably, then our focus should be on getting those solutions as fast as possible.
Question here.
Marie, this is Andreas Scholz, FEW Germany. As far as premium traffic is concerned, how do you see that this segment will foster the further development of yields? And do you see some difference between the regions, take the US, Europe, other places, where this segment will have a significant part for the yield?
Yeah, so what we have seen in terms of the recovery, so we only see the cabin classes. We can see the premium we call business and first, and everything else is economy. And when we compare those two, the evolution of the rebound in those two cabin classes, it's been quite interesting to see that they have evolved completely in parallel. Although the premium share, of travel is obviously much smaller than the economy share. So it hasn't, that still remains the case, but both have evolved at pretty much the same pace. And then unfortunately we do not collect data on purpose of travel. So